Good morning, everyone. Thank you so much for joining our webinar. Today is day 2 of our Traders Toolkit. Okay, so here's a quick outline of what we're going to do today. We're going to cover on how to read a chart. We will cover setting your entries, stop loss, and your profit taking, how to avoid panic selling and getting faked out. And lastly, we'll have market prep. So we have Trader Morano with us today, and he will also go over his strategy on how he approaches a trade and how he also sets a stop loss and profit taking, because we both have different approaches to our trading. So he will go ahead and share that. So here we have on how to read a chart. Now that you're familiar with the basics of the price action and technical analysis that we went over yesterday, the next step is to interpret the chart. Okay, and I'll go over these examples at the end, and we'll go ahead and take a look at the NASDAQ. We'll take a look at SPY, Tesla, and Apple. Chart reading. Look for consistent candles, always look for volume, and always look for patterns. Always look for also crossovers. When I'm looking at a chart, I look at the, I'm using the EMAs, STO, and TTM squeeze. So when I'm looking at a chart and I'm looking at an entry for a certain stock, I'm looking if we are crossing over our EMAs, if we're crossing over our STO, and if we're releasing from a squeeze. I'm also looking at the price action, volume, and this helps me set my entries and my exits, and also my stop loss. Patterns. Okay, I went over briefly patterns yesterday and price action, and I'm going to cover a little bit today because we have different types of patterns. Okay, and as you guys know, the price needs to touch at least 3 times on your trend line for your pattern, for your trend line to be valid. We have 2 different types of pattern formations. We have technical chart pattern, and we have candlestick pattern. So here are some examples of the technical stock chart patterns that I went over yesterday. And it's, you know, like I said, don't really concentrate on the names because it's a lot. We have a lot of names, and this is just the tip of the iceberg of some of the patterns that form. In addition, we also have the cup and handle, which is one of my favorite patterns to trade. We have the cup and handle here, and then sometimes we'll have the inverted cup and handle, which will be the opposite. You know, we'll be in an uptrend, and then we'll have the price, you know, round out a little bit and, you know, fake out some buyers here at the top, and then take a dip and then try and retrace, and then either going to continue selling off or it's just going to make a reversal. Some people like to refer to this as a fish hook. You know, a lot of people have different names for patterns, but this is also a fish hook. You know, it's a term that I've heard. I like to refer it to as a magnet or a U, you know, what have you. But just, you know, just keep in mind of the pattern, the roundness of the pattern. And then we have the formation of the handle. Like I said, we can break either up to the upside, or we're going to come back and retest resistance and then continue selling off. Totally depends on the price action. Then we have the candlestick patterns. Okay, and I'm going to go back to this, and this is going to help us set our entries and our exits and our stop losses. Okay, and again, don't be too concerned about memorizing these names because it's really overwhelming. Just try and, you know, recognize the patterns. How do they form? So we have the bullish formations here. Very common. I'm sure you guys see these all the time. And just because we have these red candles here doesn't really mean that we're going to continue selling off. We might if we break below, you know, our support down here at the bottom. All right, and then over here we have our bearish patterns, and you know, like I said, it'll form sometimes an inverted cup and handle, we have inverted head and shoulders, and so on and so forth. Setting entries, exits, and stop loss. Always enter above the close of a candle at your specified time frame. So let's say you're looking at the 5 minute. Okay. Let me go back. Let's say you're looking at the 5 minute and you're here. Let's say you're here. You're looking at this, you're looking at, let's say, Apple. It pulled back, and ideally, this is a 5 minute. After this candle closes, you want to enter above the next candle, above this candle. So if we open above this candle, that's a signal that that's your buy signal, in other words. And then it just continues. You can either enter at the close of this candle or the close of this candle, just to give you some confirmation. And then you would enter here. And then you would go ahead and set a stop loss down here. Taking profits, you can take profits at your average true range of your stock, which means that every stock has their limit. Okay, they move a certain amount of money during the day. For example, I believe Apple, moves about $2 and change a day. So if you're looking at Apple and we're looking at it at 140, and within the next 15 minutes it hits 142.50, it's reached its peak for the day, and chances are it's going to just stop at 142.50 and either continue or just consolidate or pull back. Okay, and at that point you would just have to look at the price action and your volume, and it's going to tell you. It will tell you if the trade is still valid. Okay, and again, you take your profits at the close of a candle or the height of your pattern. The stop loss is set in different manners, such as you can set your stop loss under your pattern, under your price, or you can set your stop loss, Let me give you guys an example here. Again, let's say you're looking here at the 5 minute. You can set your stop loss here at the bottom of this pattern here, which would be your support. And your profit taking, can be here at the height of this pattern. You see how that makes sense? Okay, and again, depends on the time frame that you're looking at. Let's assume it's a 5 minute. You would set your entry here at this resistance here. And since we're breaking above it, that's when you would take your entry, and your profit taking would be here, and your stop loss would be down here. But as we go forward, as we go higher, you would trail your stop. So let's say, we keep going, you would set, trail your stop here at your previous resistance turns support. And at that point, let's say we have a little fake out here, and then we come back and we start to retrace, then you would set your stop here at your original entry. So you just break even and you protect your profits that way. That's one way of doing it. Or you can use the options profit calculator, and it can guide you based on your account size, what your risk tolerance is. But for the most part, what I like to do, I like to set my stops this way. And, based off the patterns, based off my price action, also my EMAs, I really use those also to set my stop loss and my exits. Now, another topic that's really, really important is on avoiding panic selling and fake outs. Okay, always follow your plan, stick to your stop loss, don't panic because SPY is pulling back. Okay, this is a really common mistake that we all make because you know what, not every stock runs with SPY. It does, you know, SPY, it is a very important index to take into account, but you know, not every stock is going to revolve around SPY because there's been times when SPY is selling off and then we have other sectors that are just booming. So if you set, you know, your mindset on that, you're going to have a really hard time trading. So use SPY as a guide. That's what I use it as. I use it as my guide, and I like to chart it out all the time because I like to trade it. It's very liquid. The contracts are very affordable. You know, they expire every other day. So, you know, it's like trading on a Friday, you know, when the contract expires on that day. And you can make a decent profit, again, if you know what you're doing. And you can go ahead and trade SPY. Don't get too intimidated by it. But again, don't rely on it so much. All right. And I'll go over this and the sell-off that we had yesterday. Number 4, exit only if we have a hard continued sell-off. Stop loss hunters and market makers will do their best to fake you out and take your stop. Okay, so I'll stop there. Let me just give you an example of SPY. So what did we do yesterday? I outlined this yesterday in our workshop in the morning. So we were here. We were here pre-market. And I drew this rectangle here because we formed a price range. Again, one of my favorite patterns. We could have gone both ways. We could have gone either to the upside to break over 434.17, or we could have just broke down. And the price action here was telling me that, you know what, the buyers were exhausted and there was very little momentum pre-market. Come the open and we break under my level here, under this pattern, and we sell off. Okay, now this right here, my TTM squeeze was telling me that the momentum was lost. We had an STO crossover to the downside pre-market. And we just, you know, we pulled back is what it was. You have to know the difference of a sell-off and a pullback. And really what SPY needed was a rest because we've been in an uptrend since June 21st. Again, I highlighted this yesterday. And we made a reversal. Our price action confirmed it. And then our EMAs confirmed it here when we crossed over and we had a golden cross here. We crossed over the 200, the 21, the 50, and the 9. Boom. That was your signal to go long, right? Simple. But with SPY, you know, it's really unpredictable. But, you know, you could have totally swung this, you know, for a few weeks had you just followed the trend. You know, but being, you know, the market was a little shaky, wouldn't have been a good idea. But, you know, some people did that and they just swung SPY. And then finally just rested. And really what this was people profit taking. We had a lot of panic sellers here. And the reason that I can tell that this wasn't a sell-off was because we didn't cross over. Our EMAs didn't cross over completely on this big time frame. So what it told me here was that we were just correcting our price. We bounced off our moving averages, which act as support. And guess what? We're now in a little uptrend. We might not make a big move today, but nevertheless, we're still following the trend. We can always, again, do one or two things because we have a Fed speaking today at 3 o'clock Eastern Standard Time. He's going to make some sort of statement about inflation. So we can always just consolidate and sell off into the statement, depending on what this man says, if he's going to pump the market or if he's just going to, you know, follow his script. But really what we're looking at here is our price action and our trend. Okay, this is all a trend. Your support and resistance lines are a trend. Your moving averages are a trend. Your patterns are a trend. Your price action is a trend. All this is a trend, okay? All this, and no matter how you look at it, you can be looking at, or using other indicators. It's all a trend, okay? Just follow the trend, and I've said this many times. The trend is your friend, okay? So this was really easy to be faked out yesterday. Let's look at the smaller time frames. Let's look at the 30-minute, which is what I was looking at yesterday, and I was day trading SPY because I didn't want to scalp it. I didn't have time to scalp it, otherwise I would have, but I covered it a little too early. I believe I covered like right here. So what told me that we were selling off at this time frame was that we crossed over. Our EMAs crossed over, and that's what I looked at. And so I entered around here at the break of the pattern, and I set my stop here at 433, around here at this point. Although SPY tried to, make a reversal here, it really wasn't a reversal. People were just covering their positions, and then we continued to sell off. So you could have been really faked out here had you been looking at a smaller time frame, because there's just so much noise in between. And again, my sell signal was here when my STO crossed downward, and my TTM squeezed bearish, and we're red compared to what we're here in an uptrend, right? We're light blue. Our histogram bars are light blue. Then we started to lose momentum. We got dark blue. And then finally, we just gave up and we crossed over to the bearish side. And again, I took profit here, and I believe I signaled a re-entry on puts here under 432. If you missed this drop, you guys could have caught the second drop here. And this was a hard drop. Look at this. Why is this valid? Why was this entry valid again? Because we we opened under this candle here, under the close. All right, I could have entered here, or I could have signaled here at 432.26. That would have been too tight, and it would have faked a lot of people out. And again, really what the price does, it tries to retrace, it tries to fake people out, really what it is. And we have this huge solid candle, and look how nice that is. You guys could have caught a really nice short here, a continuation, and you could have just rode this all the way down here. And here's my 200 moving average, which acted as support. Look at this lovely, sell off. And then we just totally bounced off of this trend line here, and we made a move to the upside. And we reversed, we reclaimed our buy signal up here because our price was sitting on top of the EMAs. And although it got choppy, but nevertheless, let's just concentrate on the trend and on how the price is sitting on top of your EMAs, acting as support and resistance. And here we are at the peak. Okay, so I'll hand this over to Trader Morano, and he can go over his strategy on how he sets his support and resistance lines. You ready?
I'm ready.
Okay, let me stop sharing. Okay. I'm gonna stop sharing. Okay, I hope this doesn't get cut off, because last time I stopped sharing and the video just completely stopped. So let me know if that happens.
Okay.
Let me stop it right now.
All right. Can you guys hear me? Let's see. Oops. Can you can you see my screen? Let's see.
Okay, I can see your screen there.
Okay, I have my phone. I'm not in front of my computer, but all right. Sorry guys, I do want to have a chance to share my strategy. Thank you, Trader, for sharing that. Can you currently see my screen on my phone? So okay, so my strategy has evolved over the past year. Um, it started with having a lot of indicators, having a lot of lines here and there. It was getting a little bit too convoluted, too confusing. There's too much going on, and over the time, I've decided to. You can't see the screen. Okay, let me try again. Oh, Trader, you may have to give me permission. Since only the host can share this meeting. Okay. Okay, looks like I am sharing now. Okay. All right. Can everyone see my Thinkorswim app? That's my wife. All right. So my strategy is a little bit. I want to say I don't want to say a little more simpler, but I try to make it a little more simpler. I do have EMA's expansion moving average in my chart. I use it more as a confirmation, not necessarily as a trigger. But I use mainly um, supply supply and demand zones, levels of support and resistance to identify the next reversals or the next levels of that its stock may bounce at. I also use a combination of patterns to identify to make it easier. If I were to look at this chart, just ignore this, the EMA. But if I were to look at this chart, I can over the time you'll be able to see patterns. You'll be able to see, after looking at charts every day, all day, you start seeing patterns on different on different stocks. Each stock moves differently, and I think so. Here's a list of all the stocks that I have on my mind. I don't trade all of them, and I actually a lot of these I have alerts. So if you're Merrill's, there's a ton of alerts that I have, um, and if let's say I'm watching Oxy for some reason, um, I do my own charting, and then I have my alerts, and they're there. I don't worry about it. I know that that's my level. I know that's my level for entry. So then I move on to another chart. And so when the time comes and I get a trigger, then I go back and look at my chart. Um, if the level doesn't trigger, then I don't worry about it. It's just not. I don't spend. I go where the money is. I go where the trigger is, and that's what I trade. But I want to use this as an example of TSM just because this one of the tickers that I'm watching this morning for to trade today. And I wanted to take up this opportunity to show you how I set up for a trade for today. Um, again, if you were on last workshop, you've learned about support and resistance. This is what I do every day. I set up my levels, my level of resistance. I guess here it doesn't really matter, right? Because it's so far from where we are, but it's just a habit. If you notice right now, I'm the weekly chart. So that's where I start. I set my high and I start from the top and then I work my way in. Okay, so there's really not much, not much support resistance, at least on the weekly. Okay, so then I zoom out, and these are my support and resistance. But the area that I'm going to focus on is here, right? And so now, if you look at this, the last couple of months, the TSM had quite the rally, a pullback as people started taking profits, and now it's consolidated. This is what I like. You want to see a ticker where it's consolidating and it's ready to take off. Okay. Now you can see at the bottom of my screen, I also have slow stochastic. I use it as an indication to help me identify possible momentum shift. You can see, here's an example. You can see when the ticker reached a high 142, how the slow stochastic crossed to the downside and a signal a potential downside. And that's what he did. And now it's just consolidating a little bit. And now it's signaling, the low stochastic is signaling a potential upside. So that's the other indicator that I watch. So once I have identified that this stock has shown a potential for upside, if I'm doing calls, or potential downside if I'm doing puts, and then also look at the implied volatility on the bottom of my chart. It's very low. Okay, what that's going to do is that most likely the contracts that I'm going to be dealing with are going to be relatively cheap because my implied volatility is small. So does that make sense? I would take that as a yes. So that's the weekly. So you look at the daily and continue setting your levels to support resistance. I see this and I get really happy. You know why? Because it's creating a range. It's getting tighter. And when a stock gets tighter like this, it's just ready to explode to either to one direction or the other, right? And as option traders, that's what you're looking for. You're looking for an explosive up, or if you're going down. You don't own any shares, so you immediately. And I find another level of support, and I find a level here, right? This is what draws my attention. Trader just mentioned if a level is tested, if its ticker hits a level 3 times, then it becomes a trend. And so what happens is the more the ticker hits a level, the stronger that resistance or support is. And typically what I've seen is if that ticker breaks on either the third or the fourth, it turns to a very explosive move. Think about it. Think about these levels of resistance as doors. The bigger you have, think about people pushing towards the door, pushing into the door. The many times the ticker hits that door, it's going to need a lot more force to be able to go and break that big door. Does that make sense? I'm just thinking of analogy. And so in this case, we have a level of 121, 121.4 or something like that, somewhere in this area. Okay. Now, sometimes we set a call out, and we say, hey, we're looking at this level. We're looking at 121.39, but in reality, your trigger should be more of a range. Okay, and this is going to help you to avoid possible fake outs, and it's going to help you have a better entry and exit in your positions. Why? Because you're giving yourself a leeway. Now, I do have a 121.39 as my level, but in reality, what you saw, if you notice what I did here, I created a range, and that range was from this level right here. Let's see, 120, the high of 122, and the low of 120.93, right? So that's my range. So now that I have set this zone of resistance, Now I can zoom in. Hey, actually, let me just for make it a habit. I'm going to set this level right here. Remember, we're still doing levels of um, support and resistance. Okay, then I zoom in, and now I'm going to move. So now we're daily. Now we're going to move a little bit closer. Now I'm going to move to the 1 hour. Okay, and I already know what this line is. So when I zoom in, I'm already aware that this is the zone that I'm watching. Okay, and so if there are any other areas that I'm interested in identify levels, important levels, then I do that. I do that right now. Here I see another level, roughly. Here 1, 2, 3. That is an important level, right? Just because of the fact that here's pretty close to that level. That tells me that's an important level. So I'm gonna use that as an important level, and in this case, I'm gonna use that as my stop loss. Here's the other resistance. Okay, so now I'm here. Now I've zoomed in. Remember, we started from the week, we moved to the daily, we moved to the hourly. Now I'm here. Now I'm ready. Think about if you ever go hunting, I guess, I don't do any hunting, but I assume if you go hunting, you don't just go anywhere in the jungle. You zoom out on the map, you know where you're looking for, where your prey is going to be, and then you zoom in, and you zoom in really closely until now you're in the woods. Right now we are in the woods. We see our target, and now we need to identify where is it going to move. Okay, now we need to, is it going to move to the right? Are there any obstacles on the right? Maybe it's not going to go in that direction. What is the path of least resistance? Okay. Now we're here to set my alerts. In this case, I already identified levels of resistance. So
Your voice is cutting out.
Here, 120.75, and I'm gonna say alert. Roughly my entry. All right, 1, 2, 3. Let me see. Is that better, trader? Can you hear me? Sorry.
Yeah, we can hear you.
So, all right. So here I am now. I've set my support, or my trigger level. Remember, this is going to be a zone, right? And so once I've entered here, then I already set my stop loss. Okay, so my stop loss in this case, I'm going to set it right here. Because if it goes below this, I know that's a level that may trigger a move to the downside. Okay, here it is. So 1, 2, 3. Okay, and now I have my range that I'm looking at. Calls above 120.75, puts below 119.86. Or if I've entered above 120.75, my stop loss will be 119.86. Okay, so let's say I've already entered my trade. Let's say it triggered 120.75. What can, not unfortunately, but typically what happens is when the ticker breaks a level of resistance, it almost always comes back and retests that previous resistance to in hopes that it will turn into a now a support level. This is where you may get faked out. If you enter a breakout, and it pulls back to find a new support, which is the previous resistance, that may trigger some psychological emotions, and you would want to get out of trade. So there are two things that you can do. You can either wait until it comes back and retest that previous support, previous resistance, and now it's going to be turning to support, or you can buy multiple contracts at the break, sell one, and then let the other one hold the other one, and wait for it to bounce and move to the upside. Okay, so that's one thing. The other thing that I want to show, and that's very briefly, that's really my strategy and how I look for plays. The other thing that I want to mention is, Trader, you mentioned that about getting a feel of where the market is overall. You can look at this is a futures, but now where the market is open, so we can look at SPY. Just like Trader said, not all tickers move with SPY. Why? Because not there. You can always go. Other tickers move better with the Qs. Here's the Qs. Okay, these are mostly technology companies. So what you can do is you can go here. You can just Google the companies that are within the S&P 500, and what you notice is that the top 10 companies are the ones that have the most weight. Actually, the top five, if you notice, Google, Facebook, Amazon, Microsoft, and Apple are the ones that really carry the S&P 500. So when you see, excuse me, when you see Apple, when you see Amazon move, SPY is going to do the same. It's going to follow. But let's say you're holding a ticker, another ticker that's not on this list. One example is Snap. Snap is actually, so obviously these tickers are also in the queue, but Snap is in the queues. It's in the on the tech. So if you're trading Snap, you're not gonna be focusing on SPY. You're gonna be focusing on the queues to know where you are and see if the whole market is pulling back. Okay. Any questions? I just kind of breezed through that, but I think, let me stop sharing here. Oh, I see a lot of chats probably telling me that you can't see it. Can you restate that again? So this will be recorded. This is being recorded at the moment, and we will post this information in our Discord chat room for everyone to review. But any other questions regarding support and resistance, just really anything, I'll be happy to answer. So you've noticed, while I wait for your questions, if there are any, you notice that my strategy is a little bit different. I didn't use any indicators. I mean, I did briefly, but just to kind of get an idea. But when I'm in the trade, I don't usually use EMAs. I already know what my levels are. I already know what my levels of resistance are and what my possible reversal areas are. And so that's my strategy. If I haven't reached the level of that resistance level, then I know that I still have room to go. So why should I exit my position? Okay. So that's my strategy in terms of knowing when to exit your trade. In addition to, if you're already green, if you're already making money, then you should take some profits. But let me go over the slide. I think I've covered everything. Trader, you got anything else? I think that's it. Do you? Okay.
Yeah, you know what? Actually,
let's see. Do you stop drawing at 1 hour charts, or can you go further? You can definitely go further in.
Yeah, if you want to go over that, trader, but yeah, you can certainly move to the 15-minute. But in my case, if notice that I stopped doing my support assistance and at the 1 hour, because that's my anticipated trade length is going to be a day trade. If I'm going to be looking for something like a scalp, then I'll be zooming into more 15-minute, 5-minute, or even a 1 minute and setting my levels of support and assistance to know where my entry or exits are going to be. So the time frame that you're using to set your levels of resistance will depend on your anticipated trade length. Does that make sense, Chris? Awesome.
Okay, yeah,
And
you
that's
guys
all
have
I
any other
have,
questions before
Trader.
we move forward with the market prep?
We can't hear you if you're trying to talk.
Oh. Can you guys hear me?
Yes.
Okay. Okay. Okay, so let's continue with the market prep. Let's see what the market sentiment is. Again, we went over this stuff yesterday in the workshop, and it's all the same. We look at the indexes, we look at the ETFs, we select the tickers to trade for the day or maybe even swings. And we go ahead and check the economic calendar, which is what I like to check. And like I said earlier, we're going to have the Fed speaking today at 3:30. So definitely can see some volatility into this meeting or after. Since he speaks a little late, he's going to speak towards the market close. We should have some volatility, before that. And what I was looking at earlier, I was looking at SPY. Oh, and actually I wanted to cover this little pattern here that's forming on eBay, the inverted cup and handle that I mentioned earlier. And if you can see that it's already getting a little rounded here with eBay, and we failed to, hold over the highs up here, and we're getting ready to sell off. So this might be a good idea to get some puts. We're probably going to come and retest our support area here at around 69.50. And then we're going to go ahead and reject and take this all the way down. Now, although this runs with heavy with the NASDAQ, although the NASDAQ is all the way up, eBay is just exhausted. It's exhausted for many things that it can't go over its average true high. Up here at 70, it's already past its high. I think the high was like about 65, and we went over that by about $5, and it just couldn't go any higher. So I'm going to be watching this for some puts, and let's take a brief look at SPY on how we are doing on the 30-minute. And looks like we're breaking down. So here we have another price range. Let me draw this out. So we have another price range here. We can go both ways. Again, we can break over 433.77, or we can break under 433 and grab some puts again. And, it looks like the same pattern that we formed yesterday, right? And if we break under these levels, we're going to have a nice little sell off. If we break under 432, another drop. Okay, so I'm going to be watching this 2J trade puts at the open. And let's see, I have my list here. I'm also watching SPCE, DKNG, and FUBO. Let's see what else is going on. I also saw the EVs that were moving. We have Lee, which is holding up really nice above our support area. So I'm going to add this to my list. So we could take calls over, I would say the whole number, 34. And if that fails, You can grab puts around 32.50. XPEV did not do well. I mean, it's just consolidating. Really, we have this huge consolidation area here. So we need to break over 45. I signaled this yesterday, but you know what? We could not break over this level. So the trade was invalid. And a certain ETF that I was looking at today in the morning was ICLN. Again, I talked about this yesterday, guys. Clean energy is where we're going. And look, I set my alert and my alert didn't go off yesterday. So I'll set my other alert up here, but it looks like we're a little exhausted for the morning. We might just come back and fill this gap. This is another important technical, I would say maybe like a technical trade. Whenever we have gaps, the gaps always fill about 80% of the time. 80% of the time, you'll have a gap fill either to the downside or to the upside, depending on how big the gap is. Here, we can see this ETF and its holdings going to retrace, and it's probably going to move with the market. It's going to move with SPY. And if SPY starts to pull back, then this is going to definitely going to fill in the gap here, bounce off the support area around 2370, and take it all the way back up. Okay, it just needs to rest, and it happens. Okay, we're not gonna shoot all the way up all the time, but it's really important to kind of look for what's going on in the chart. And I like to draw out my gap. I like to, you know, put this little oval circle here, so it lets me know that, you know what, we're gonna fill this up. Don't take any trades here, and just wait. I can grab some puts, but you know what? This gap is really too small. It's not really that big of a gap fill for me to take some puts here. So really what I'm going to be doing, I'm just going to be watching this here for a bounce and then watch its respective holdings that it holds, which I believe it's Lee and other tickers. Let me confirm here on ICLN. Hold on, guys, give me a minute. Is there anything that you guys are looking at that you guys want me to chart out? Anything that is of interest? Okay, so here are its holdings. Let me bring this out here. Okay, so we're looking at EMPH, plug, and SEDG, and run. All right. Yeah, so if you guys can look at plug, plug is just trying to move up, and it looks like we're just going to reject this resistance area here, and it's just going to pull back with ICLN, and it's going to come back and retest our support down here. Okay, so I still have this on watch. I believe I called this out yesterday too. You know what? If my triggers don't hit, not a big deal. I can always just set my alerts and come back to it.
We got a couple of charting requests in the chat.
Oh, BA, Walmart. Oh yeah, rig. Okay, let's see, rig. Rig. Yeah, you mentioned this yesterday. Rig looks good. It looks okay. It looks like, you know, it just had, again, another price correction here. And it's bouncing off of this moving average, which is our support. If we go under 460, we're going to see a continued pullback to 440, and maybe even 4. But I believe you said this was a swing, right? Depending on your expiration, you still have time. And again, if you're swinging, go ahead and look at the daily, look at the weekly, and what's going on here. We're approaching a golden cross, and what's going to happen here, we're just going to consolidate most likely, and maybe even pull back, like I said, to maybe even 430, which is not a big deal, depending on what your expiration is. If you bought time, and if you have an expiration, let's say like at the end of the month, then you're good. What I would do, I would set my stop here around $4, because we can always come back and retest the support, and then guess what? We bounce right back up. Okay, still looks really great. BA. Oh, okay. So if you have August, don't even worry about it. Don't even stress about what goes on in the smaller time frames. Okay, always, if you're swinging and if you have a long expiration like that, always concentrate on the major trends, which are the monthly time frames, the weekly time frames, and the daily time frames. Anything below that is just a minor trend and a minor time frame, and you really don't want to look at that, because it's just going to psych you out, and it's going to make you, take a loss, and when you shouldn't have to take a loss or take an exit. So if you look at the monthly chart, the monthly chart's looking pretty good, and it just needs time. That's all you need. It's just time, and it's a really good technical formation that we have here. We're sitting on top of our EMAs, although our price action is a little thin, but hey, you know what? We need volume. That's all we need, and we've had it. We've had a lot of big buyers step in here last month and in the previous months, and people are just loading up the boat. And once we break $7, it's really gonna take off. Don't expect it to go all the way up at one time. Okay, $7 is our resistance area, and if we break that, we'll see a really nice run to the upside. Okay, you're welcome. Okay, Walmart. Yes, Walmart. You know what? I was looking at that also, but my goodness, man, it's just taking such a long time to break out. And Walmart, I do like to trade it intraday, but what it looks like to me, it looks like it makes a good swing. And I was charting this out over the weekend, and I noticed that it's creating this price range here. And the buyers are getting a little exhausted. So we might come back here and retest 139.20 and then take it all the way up. So the reason being that I'm saying that is because we have really low volume. And look at my STO is getting really weak. So is my TTM squeeze is getting a little weak. So we can see a little correction here down to this level. Keep it on watch though, and we can make a nice explosive move to the upside. I'm watching this for a swing because it looks really good on the weekly. We just need a little bit more volume, and with the Fed speaking today, I don't know what can happen with Walmart. It's struggling to go over the 140s. Although we beat earnings and we had some really great news here, it just could not break. And instead it just came back and just broke down and retested support. And I was just playing in between. So if you guys want to day trade this, let's look at the 4 hour. You guys could trade the range. Just keep in mind that there's a price range here. Okay. You guys can always trade this above 140, 140.50, and then take some profit around here, 141. Okay, always pay attention to the price action though and the volume. We have a lot of volume and we can take it to 143, just write it, just go with it. And take your profits soon, because look what happened here the other day. We had this crazy spike and then quickly sold off because we couldn't hold above this level. And this is a level that I've been talking about, 140, 142. It's just not doing that. All right, so if you guys want to day trade it, looks good here over 140.50. If not, some puts here under 139.50. And BA. My favorite. Okay, so BA. BA is still in a downtrend. I would like to see this break above 237 to take some calls. And it's actually forming a little price range here at the bottom. Now, BA runs with the XLI sector. So I'll go over that sector right now. And it's actually reversing a little bit. And if you go to the smaller time frames, you can see that we're not doing a lot here. Let's go to the 15-minute. We can see maybe like a quick day trade. If you guys want to day trade this, maybe even above 236. Take it quickly, but we do have this crossover here with the EMAs, so we can see a continued pullback. Might even get some puts here under 235 and right to 233. Not a big move, but you can still catch a nice little profit down here. But for the most part, it's just consolidating, and you could totally trade that range. Again, if we fail to go over this high and we reject, look to grab some puts and write it all the way down. Okay, and especially if SPY is going to pull back at the open, this is going to follow. Okay, and this runs with XLI. And I was just looking at this sector right now, and it's looking a little weak. We had all of these crossovers here. We have Death Cross coming up. And so the only time we can take calls for this sector and BA is if we break over 102.40. Is it at a resistance line right now, looking for a bounce? Not really. It is, but you know what? It's just a little weak. And whenever we have the price writing under the EMAs here, it's a bearish indication. It would always come back and retest like it did right here and right here. We had these fake outs here where people, bulls got faked out here, and they thought the price was going to go higher, and it didn't. They got trapped, and it triggered more selling. But just watch it. We could totally bounce off of this trend line here, but for a safe entry on my end, I would look over 236, 236 or 237 to take some calls. Always wait for the price to hold and to break to the upside. But let's see what the market does at the open. We can continue to sell off here and then maybe even bounce off 233 and then reverse midday. Okay, so just because it doesn't do what it needs to do at the open, you're not going to look at it. Okay, just keep eyes on it. Just keep those levels in mind between 237 and 233. Does that make sense? Okay, awesome. Alrighty, any other questions, guys? Anything, any other questions for us? Any other tickers that you guys are looking at for the moment? Snap. Oh, snap. Yeah. Snap looks like it still can continue. We had a change in trend here. So although we have all this little choppiness here, let me look at the daily really quick. We had a choppy uptrend. It might, let's see. Yeah, calls will be valid here if we can break above 69.60. But let's see, what do we got? I believe we have like a pennant forming at the top. Yeah, and see how the EMAs help you do that? So we have a little pennant here. We can trade within the pennant. We need to break above 69.60 to take calls. Otherwise, we're going to come back and retest here at 68.40 with the NASDAQ running high. Let's take a look at the NASDAQ really quick. NASDAQ is just insane. We broke out of this range here, and now we're holding over our support. We can't see it run, but it might just rest right now. So just keep those levels in mind. 69.60 for calls. And if we reject that, you guys can grab some puts here around 68.70. Alrighty. Okay, guys, anything else before we close it up? No?
Trader, I just want to give first thank you for everyone that participated this morning. Just a reminder that we do have this this free workshop for the rest of the week. So tomorrow and Friday at the same time. We also invite for those that have not taken our course to log into our full course. We have some recorded sessions that happened throughout the whole month of June. There's about, I don't remember, Trader, 9 or 10 sessions that range from 1 to 2 hours. They're pre-recorded. Let us know if you're interested in getting access to those sessions. The actual option course is taught every other month. And so just wanted to give you guys a reminder for those who are new to our sessions here. PayPal, take it away.
Yeah, we cover all this stuff in our course in detail. This is just, a little brush up. And let's see, let's look at PayPal really quick. Ooh, PayPal gapped up a little bit. It looks like it still can continue. I really like the chart here. It's breaking out of this zone. Let me draw this out. It broke out of this demand zone and it's holding above it. I think it's going to come back and retest support right here at 285. But like I said, it's showing signs of a nice uptrend. I like it here above 295. We just need to hold that level. If we can't hold it, it's fine. We'll just come back and see a retest of support here around 292. And I was looking at it yesterday, but it didn't break my levels. Let's see. And PayPal runs with iPay. iPay seems to be a little exhausted this morning. So I might just pull back just a little bit. But the trend is still valid. I really like how the price is holding up. For the most part, I like it. Like I said, we need to hold above 295 to take calls. Otherwise, it's just going to come back and retest. And if it does, then we can go ahead and buy this this bounce off of our EMAs here. Okay, the trade looks like it's still valid. The STO is on an uptrend, and we're releasing from a TTM squeeze, which is a bullish sign that we're approaching a bullish trend. And we could always just consolidate here though. So it's not, it looks good. Okay. All right, guys, that's about it. Any other questions before we close this up? All right, you're welcome. Okay, guys. If you guys want access to the recorded workshops, we have it in our Discord. We have it available for the members. If you guys want a free trial, just let us know, and we'll go ahead and take care of you guys. Other than that, we'll see you in the chat, and I hope everybody has a great day.